Calgary is about to have a numbers moment. The metro region is tracking toward 2 million people, fast. Some projections say the greater metro could clear 2 million as early as 2029, with the city itself around 1.75 million by decade's end. If current growth holds, 2 million for the city by the early 2030s and 3 million by mid-century isn't wild. So why does this matter for real estate? Because people equal demand. Let me show you the proof, then the path. First, migration. Alberta has led Canada in interprovincial net inflows for 13 straight quarters. The biggest feeders? Ontario, BC. Why the shift? Lower housing costs, higher wages, lower taxes. A job market that still looks good relative to the rest of the country. Thousands of families keep landing here, and a big share land in Calgary. Second, immigration. Canada still plans to welcome hundreds of thousands of newcomers annually. Calgary is clocking population growth around 2.9% thanks to jobs and relative affordability. Translation: immigration alone adds tens of thousands of new residents. Third, the affordability gap. Toronto, roughly 1.1 million. Vancouver, roughly $1.2 million. Calgary, roughly $600,000. That delta is a magnet. Young families, professionals, investors. Fourth, supply is responding, big time. Alberta started about 53,000 homes in 2025, a 14% jump year over year. Calgary and Edmonton both hit record annual starts. Livingston, Seton, Belmont, Rangeview, Rockland Park, Alpine Park, Heartwood, Logan Landing, Nostalgia, Townlet, Seton Ridge. These add tens of thousands of doors. Detached townhomes, condos, feeding both end-user and rental demand. Fifth, the economy. Calgary isn't just oil and gas anymore. Tech startups, finance, logistics, clean energy, AI, and data centers. That diversification pulls in skilled workers. YYC Airport, Trans-Canada Corridor, US Access. Now, reality check. Late 2025 cooled. Benchmark prices dipped around 5% year over year to about $559,000 as inventory rose and sales slipped. Affordability is tightening. Ownership costs in Calgary reached about 41% of median household income. There was also a late 2025 slowdown in non-permanent residents. So no, it's not a straight lineup, but step back. Even with short-term bumps, the migration math, immigration pipeline, and relative value story keep pointing the same direction. More people, more households, more demand. What this means for real estate: higher housing demand over the next decade, ongoing new community development and infill, rising rental demand as newcomers arrive before buying, a supportive backdrop for long-term value growth, assuming you buy the right product in the right location. My path, if I were analyzing deals today: focus near job centers and transit, target family-sized units in growing master-planned areas, underwrite with conservative rents and rates, watch inventory, immigration caps, and interprovincial flows quarterly. Bottom line, if today's trends continue, Calgary's metro can plausibly sit around 2 million residents by the early 2030s, with many planners flagging the milestone as early as 2029. For investors, developers, and homeowners, that population curve is the signal. Plan for it now, before the headlines make it obvious.